Trading has never been hard. It's just you that makes it hard. Hey, for those of you who don't know me, I'm Rob. And for those of you who do know me, I'm still Rob. It's Coffee with Rob. We're going to have some coffee. Let's go and have a look, and then we'll chat a little bit further. The actual trading part of trading is really easy. Don't forget, trading's risky. Most traders do lose money, and if you don't like risk and you don't like losing money, you probably shouldn't be trading. It's interesting that so many people believe that trading is hard. The difficulty comes with the strategy, which I'll talk to you about at the end of this charting session. We'll go over the strategy, we'll go over the business plan. That's the hard part. The hard part is you, the psychology. The charts are insanely easy. The charts are not even a thought in my mind, because all you're looking at on a chart, what are you looking at on a chart? Every single candle that you see on a chart here is what's happening in the market. It's traders trading, buying, selling. The red ones are selling, the green ones are all the buyings. What you're looking for in the market is what we call liquidity. We're looking for an area where you're always going to find orders, where you're always going to find that money. So that is what we call resistance or support. We call it supply and demand as well, if you're looking for those that are in the middle here. But we're not going to go over that today. Today, I'm just going to go over simple support and resistance. Now, if you go back or you do the course or you go over many of the other things on videos on my channel, you'll see that I've shown many areas where you can go to the day chart and get your levels, come back, trade on the 4-hour chart, and then trade that way, knowing which way the market's going, knowing which way your day levels are going, and following it from there. But we trade three ways. Basically, what we do, we trade in a trend, which is trend is your friend. So if this is going up, it's in a trend. So what is a trend? A trend is where you've got three touches, and I just lost that line, so I'll just draw another one. You've got three touches along the support line. You've got three touches along the resistance line. And we just have to identify, what is a support line? What is a resistance line? Well, it's very simple, really. The line at the bottom, this will be your trend support. The line at the top, that'll be your trend resistance. Now you've got a trend, that's your trend. The line at the bottom here, that's your trend support. The line at the top, it's your trend resistance. The reason we draw these levels in, a resistance level, if it's got three touches, every time it hits that level, it comes down. Why does it come down? Not because there's a line there that's stopping it, not because there's a wall that it's bouncing off, because there's money there, because there's orders there, because that's where they've been left by other human beings, as I say. So you're looking for that money, and if when it gets to that area, there's a good possibility it'll turn and go down. Now, if you watch my other videos and my training videos, you will see that I tell you if there's a red candle coming down off of that, then in all likelihood it's going short. There's a pincer top, we'll talk about that in other videos. Or if it breaks out and breaks past this level, then it's going to the upside. And same with the trends. If it stays in the trend, it bounces, it goes up and down, up and down, up and down in the trend, then you're following the trend. The minute it breaks out of that trend, then it's going the other way. So there's three ways we trade. Remember I said in a range. So this is a range, the straight. From the bottom to the top, from the bottom to the top, from the top to the bottom. Then we trade in the trend. So you're in the trend, up, down, up, down, up, down. You're trading in that trend. And then we counter trade, break down trade, break out, break up trade. That's the best trade, because if it breaks down through this trend support, that's a counter trade. It's countering the actual trend that's going the other way. If it breaks up away from this resistance level and goes to the upside, that's a breakout trade. It's going the other way. If it comes down off of that resistance, then it's staying in the range. If it breaks down through this resistance at the bottom, it's a breakdown. It's breaking down through that. Or if it breaks up through that trend resistance, it's breaking to the upside. Those are the three ways that we trade on the charts. And that's as simple as it gets. It's so easy. You don't have to overcomplicate it. You don't have to have a million different systems in the market or anything to that effect. This trade is worrying me a little bit because it is bouncing off a midterm resistance, and I've got a higher target resistance at the top here. But you keep an eye on that. You see, don't draw too many lines on your chart. Don't have too many systems on your chart. Don't have too many things going on your chart. It's just going to confuse you. But if you do see a resistance line like this in the middle, put it in, because you can see like it's hitting that. Should I be worried about that? What I've done here is I've moved my stop loss down into a positive. This way I can't lose anything on this trade. I can only make $56. That's my worst case scenario, or I can win $500 in my other case scenario. But this is a brand new trade which we are looking at, and it's in a range. So what we've done here on this particular trade is we've seen it come down, we've seen it come down to the bottom, we've seen it come down to the bottom of the level in the range. In other words, it's in that range. It's bouncing up with a green candle in that range. So I'm looking at that range and thinking, well, it's bouncing up with a green candle in that range. So maybe I should look at a long trade. How do I confirm that? Take a little trend, draw it down here. Oh, it's actually broken through that trend as well, the short-term trend. So it's counter trending and it's breaking out of that little range. Let me have a look at a long trade here. So what do? We look at the long trade. And we take the long trade on that and we see what happens. Don't expect it to go in your favor immediately. See a little bit of red there. No big deal, guys. Things don't go up in straight lines. And whenever you take a trade, there's always the opportunity for it to go against you just a little bit before you trade. Here's a breakout trade, the S&P 500. We actually called it on Friday afternoon, which is a bad day to trade, but here we go. It broke out of the resistance. See, it's resistance. Every time it hits there, there's money, sends it down, sends it down, sends it down, sends it down, sends it down. Then eventually, because it's chipping away at the wall, chipping away at the wall, chipping away at the wall, eventually it breaks through. In other words, the money is finished, the orders are finished, breaks to the upside and off she goes. That's a breakout trade. These are the best trades. Now it's breaking out towards the upside. I expect it'll probably target the 7,000, but I don't have a predictive capability. Charts don't have a predictive capability. Nobody can predict what's going to happen next in the markets, which is why we have a strategy, because every time you take a trade on one of these charts, there's a 50-50 chance you'll win or lose. And how are you going to make a profit if you don't know which way the market's really going to go? Because charting, what you're doing is you're trading on history. You're looking at what happened in the past, will in all likelihood probably again happen in the future. And that's what you're basing your whole trading program on. How do we get around that? How do we get past that? Well, I'm going to tell you all about that now in the strategy right now. Let's go away from the charts and let's go and have a look at that, guys. Come on, let's go. Now you've looked at the charts and you've seen how easy it is to actually trade on those charts. Not difficult at all. That is just so simple, because what actually happens is traders, what they do, or people, what they do, they see trading and they watch a YouTube video or they see a course or whatever the case, and they get involved and they look at this and this looks easy. This guy's got Lamborghinis, Ferraris. He made $150,000 today, or that person made $200,000 this week, or whatever the case. And you think, I can do that. That's for me. That's what I want to do. And you go jumping in. What actually happens? You do a course, you do a demo, you get on the demo and you trade on those charts, and you see that that's actually quite easy. That's not difficult at all, is it? And you start playing around with this and you think on the demos and you start messing around with the systems that they gave you. They told you a win rate will make you money. They told you that if you win more trades than you lose, you'll make money. And you figured all this out, you do the demos and it looks quite plausible. So you get involved, you start trading, you go home, you switch on your PCs, you get the software downloaded, you put all your last money into the broker, every cent you've got, dump it in at the broker, and you think, well, I'm on this. I'm going to make a fortune. Next week, I'm ordering my Ferrari. And what actually happens? You lose the money. And you think, wow, what happened there? Now, the danger of this is there are so many of you out there that are using your last ever amount of money in the world. For example, it might be a pension, it might be a payout because you lost your job, or it might just be your life savings and you don't have another form of income. And you get involved in this, and it's your last cents on earth that you've put into the market. And this is actually what's causing you to lose, because you see in the market what you need to actually win, and what they don't tell you on these courses and on all these places and all these videos is that you need a business plan to make money in the market. You need to have some kind of plan. You need to treat it like a business, not like a game, not like just a sideline thing that I'm going to just play around with and we'll see what happens. We'll see if we can make any money with this. Well, hopefully we do, because we're putting in our last ever cents into the market. Now, the reason you're losing is because of the fear, because of the psychology, because of the fear of missing out, because of the impatience of things. A lot of traders, what they need, or a lot of people, what they need when they get into the market is they need to make a living now. They need to make a profit now, because they have monthly payments to make. They have weekly payments to make. They got to pay money out. They need money to come in. They need money to come in fast. And the minute you need money to come in fast in the markets and you're in a hurry, you start making mistakes. And this is where the problem comes in with the fear, with the FOMO. If you haven't made the money by the end of the month for those bills that you have to pay, and you're looking at this and you're thinking, what am I going to do? I'm going to start taking tricky trades just to try and get that profit in as quickly as possible. And those are mistakes that fear do to you. Those are the mistakes that get into your head. One of the biggest issues is if it's your last amount of money on earth. You see, if you're a normal person who has $1 million and you're walking around with it and you decide to take $100,000 of that $1 million and put it into a brokerage account and trade it. So in other words, you've taken 10% of your entire wealth, put it into the trading brokerage, you've decided to do leverage trading with this. Not investing or anything like that. Investing is a completely different ballgame. Believe me, guys, investing is one of the best things you'll be able to do in your life if you're prepared to wait 30 years, because that's set and forget. But leverage trading, that's a completely different ballgame. We're not talking about spot trading. We're talking about leverage trading, and leverage trading is a different ballgame. When you take your money and your 10% of your $1 million and you put it into the brokerage account, you're $100,000 there, and it starts losing 10% of that. So it starts losing $10,000 of that. There is a particular fear that comes over you. There is a particular worry that comes over you, and there is a particular stress that you will feel because you've lost $10,000. And you're looking at this and thinking, what am I going to do? How am I going to fix this? How am I going to trade this? And you'll look at it and you'll work around it. You'll work around that fear. But there's a big difference if you only have $100,000. It's the last money you have in the world. You don't have another form of income. You take that $100,000, you put it into the brokerage account. In other words, 100% of your money, the only money you have in the world, you put it into that account, you start trading with it. It starts losing $10,000. That's 10% of your entire wealth going down. And that is a different kind of stress, a different kind of fear. Now, can you imagine that kind of fear if you haven't experienced it? Can you imagine the worry that's going to come over you? So then you're going to start making silly mistakes. You're going to start dollar cost averaging. You're going to start moving your stop losses away. You're going to start making terrible mistakes because you're $10,000 down, but you don't want to lose that $10,000. You want that $10,000 back in your account as soon as possible. So you're thinking, perhaps if I dollar cost average this, I can work it back, get back to cost and get my money back at zero. It's called the relief trade. It gets back to zero. You get out of the trade. You go, phew, glad I got out of that one. That's kind of what it is. But you don't want to be dealing with relief trades. You don't want to be doing that at all. Now you've got a situation where you've dollar cost averaged and it gets worse. And you look again and you're $30,000 down instead of $10,000 down. You're thinking, wow, what now? Now, my entire wealth of $100,000 has dropped to $70,000. Now what do I do? Well, I'll try and dollar cost average again, because surely I can get out of this. And you look again, and just $60,000 down. Now you've only got $40,000 left. Now what do? Do you stay in the trade and try and hope for the best? Or do you get out and take that loss, because there's a limitation to everyone. Everyone's got that point where they say, I can't do this anymore. I'm out of here. I'm on my way. The trouble is, when you do that, you'll probably go back with that lost amount that you've got and make the same mistakes. The whole point here is, what I'm trying to get across to you is that the market is 50-50. Every time you take a trade on those charts, you have a 50% chance of winning and a 50% chance of losing, no matter what system you're using, because you're trading against other human beings. It's a market, buy and sell. And some people think it's a buy and some people think it's a sell, and there's a good reason for that. That's why it's a market. Now, if you think you're going to walk in here and you're going to be right on most of your trades, you're sadly mistaken. The first thing you have to learn, the very first thing you have to learn, is how to lose in the market. The very first thing you have to learn is that you are going to take losses, and you have to follow a strategy if you want to be successful in the market. You can't just trade willy-nilly. You can't just say, I'm going to trade here and hope for the best, trade here, hope for the best, trade here, hope for the best. You need to have a plan. I have a 3-step plan that I always use, and the basis of the plan is simple, and that is make more on your wins and lose less on your losses. That's how simple it is. There's nothing tricky about it. The trick is to keep the loss the same on every single trade. Now, how do you do that? How do you keep the trade size the same on every single trade? Very simple, really. When you identify a trade, the first thing you do is identify where you want the invalidation area, where you want the stop loss. Look at the trade and say, if the trade gets there, I don't actually want to be in that trade anymore, because in all likelihood, I probably wouldn't take that trade. That's the area where you want the stop loss. But here's the crux of the matter. But you've got to keep that risk amount the same on every single trade, because if you change it, If you change it, then you don't know what your profits and losses are going to be. You don't have a plan. You can't really keep the monetary value the same. You've got to keep the percentage of your account the same. So what I like to do, I like to risk 1% on every single trade of the account that I've got. You might want to risk 10%, you might want to risk 5%, you might want to risk 2%, 0.5%. That depends on your risk threshold, how you feel about it, and what your balance is in the world. I prefer 1%. I lose 10 trades, I lose 10% of my account. No big deal. If I risk 10%, I lose 10 trades, then I kind of lost the whole account, which is not great, not a good thing. So 1% it is then. Let's say you have a $25,000 account, round figure because we used that on the charts. That $25,000 account, you risk $250 on every single trade. You're going to say to me, Rob, but how can I keep the risks the same on every single trade? You get different levels of stop. No. All you do, you look for that invalidation area, work out the size of your trade to that invalidation area. How much is $250? How many pips, how many contracts can I buy between the cost and that stop loss? That's all you do. You work out the $250 size. Then you just work out if you can make more than $250 on that trade if you're trading. Is it possible if I look at the chart? Can I make more money on this? That's simple as it gets. Then you just manage the trade and just make sure that every single trade you manage the same way. And always keep the account size the same. In other words, even if you make a profit or a loss on the account, don't change the monetary value that you're working with. In other words, you're working with a $25,000 account. If it grows to $40,000 and you haven't taken the profit out, don't change the amount that you're dealing with. You're always trading on a $25,000 account until you decide that you consciously want to change the size of the account that you're dealing with, and then you're going to make all your trades based on that value. That's how you trade. That's how you manage your trades. And that's how you make money in the markets. If you haven't joined the members area yet, go down there and get all kinds of things that I've got there for you. There's trade of the day, there's a course, there's a whole bunch of things available in the members area for you. Join the club, be part of the club. It's great fun. If you haven't subscribed to this video yet and you've watched it all the way to this point, then surely you should have subscribed by now. So hit the subscribe button and make sure you stay with us for all the exciting things we do. We have live shows every week. We've got shorts, news. We've got all kinds of things. We've even got the Telegram channel where I post trades every day, and everybody can post trades there. Everybody can talk to each other. Go and join that. Come and be part of the club, man. Come and have a bit of fun with us. And on that note, thanks for watching. If you want to know more about my strategies and know more about my systems, because systems don't make you money, but they'll help you trade, then pop down to the other videos. Where are they? Up there or wherever, and give them a watch. Till the next one, guys. And on that note, thanks for watching. Cheers, ciao, and bye.